So in the previous session, we talked about calculating goodwill. And what standard we were discussing there? We were discussing IFRS 3. In that, we define what is goodwill. Huh? Okay. Can't we make it even full? I can't do anything to make this one up to here. இதா எங்கவா இதா இல்லை அது இங்க இது ஈன ட்ரை பண்றேன் அது இஞ்சுள்ள எரோ தாங்க அது fine anyway. So now if an entity A invests on entity B and the incorporation date is 1st January 2020. I am talking about entity B. Entity B incorporated on 1st January 2020. Acquisition date by A. Mudir, Assalamu alaikum. Alhamdulillah, Mudir. Mudir, can I call you after 1 hour? I'm in middle of a lecture.
Okay.
Thank you. Right? So, acquisition date meaning by A to B. Also, you see the, you can sit down, no problem. Right? So, now what is the significance in this? Company B has been incorporated on 1st January 2020 and company A acquired company B on 1st January 2020, meaning in other words company B has been incorporated by company A. So the acquisition date and the incorporation date becomes the same. In these circumstances, and also here we said it's 100% owned by company A. The investment by company A to company B, it's fully owned. We name this fully owned subsidiary. Certain significant information with regard to this. Number 1, B has been incorporated by A. Number 2, there are no pre-acquisition reserves. There are no pre-acquisition reserves. In this situation, subsidiary has been formed by parent. That subsidiary wasn't there until parent has incorporated this. Clear? So in a situation like this, if I to calculate goodwill, regardless of whatever the situation of the company, the calculation of goodwill, we need to follow the same equation or same pattern. What we do, we have to take the fair value of the purchase consideration. PC is not police constable. It's purchase consideration. So, fair value of the purchase consideration is how much A invested on B. So, let's assume that is 1 million they paid. Parent company invested 1 million in subsidiary. Secondly, the share capital of the subsidiary, let's, for the sake of example, also assume 1 million. Now, the investment by the parent is 1 million and the subsidiary share capital also 1 million. Now, we need to find out whether in this acquisition, is there any goodwill on this acquisition. We need to find that out. How to find that out? As I told you, you start with fair value of the purchase consideration. How much is the fair value of the purchase consideration? Which is 1 million. That's my purchase consideration. So I take this. And then I need to add fair value of the NCI. We will talk about this slightly later. For this example, do we have non-controlling interest? We don't have non-controlling interest. So therefore, that is 0. So then, I take the total of these two. Very difficult calculation. Many don't know how to do that. Only I know. He knows. You are a doctor. Right. Then, what we do, we subtract. See, this terminology is very important. We subtract fair value of identifiable net assets of the subsidiary at the date of acquisition. This, we need to find this out. Now, from our basic accounting knowledge, we know that somewhere. So we know that asset is equal to equity plus liability. So asset minus liability is equal to equity. And this equity is, in other words, we name this net asset. Here in this example, we just started the company, we just invested 1 million and my equity is 1 million and probably this 1 million has been deposited in a bank. Assume like this. So, think about the balance sheet equation for this. I will have cash at bank 1 million, which is equal to equity or the share capital of the subsidiary, OB, which is, this is the equation, no? So accordingly, my net asset, see the net asset, we need a net asset. You also please remember, net asset comprises of share capital and any other reserves available at the date of acquisition. You got to see the date of acquisition. In the previous class, we talked about this dowry, marriage arrangement, until the date, how the funds of the husband, all this. So that's coming to that point. So here, how much is that? That is also 1 million. So if you really find out the difference is the goodwill. In this example, goodwill is nil. Is that makes very clear for you? So That's the very basic setup when preparing a consolidated financial statement. Let us go to one example and see whether we can. BPP மீது அப்புறம் இருக்குது BPP நல்ல. Yeah. So we will try this question now. Generally, I don't tear my book, but I'm had to tear for you all.
Can send the entire book.
No, I can't send that entire book. Then I will lose the book now.
Why do that?
Okay, let's go to the question. Okay. The statements of financial position of Portos Company and Sonus Company at 31 December 2014 are as follows. You have, see, they have given you some key information in this question. They have given you the property, plant and equipment. Hello?
Hello?
Yeah.
ഓഫീസ് ക്ലോസ് ആണോ?
யார் நீங்க?
ഞാൻ ഇത് 12 നമ്പർ ഓഫീസാണ്. നമ്മൾ അക്കൗണ്ട്സ് ഓഡിറ്റിംഗ്.
ஓகே பிரதர், எனக்கு ஒரு 10 minutes டைம் தாங்க, உங்களுக்கு யாரும் கால் பண்ணுவாங்க. சரியா? ஓகே, தேங்க்யூ. ரைட். இந்த நம்பருக்கு உங்கள் நானுக்கு அனுப்புவோம். யாரோ உங்கள் ஆஃபீஸுக்கிட்ட வெயிட் பண்ணி பேசிட்டோம். ரைட். See here some significant information. They give you 2 balance sheets. One balance sheet of the parent and another balance sheet of the, what is happening here now?
What is this guy going
Yeah, my internet. That's the phone, internet device. Yes. He went out. No? விளங்கல எல்லாம் இருக்கு ஏசிசி ஃபுல்லாக இருக்கு. யோ மேஜிக் வேற ஃபோன் வேணும். நீங்கள் ஃபோன் எடுத்து வைத்தால் எங்கள் ஒன்றும் செய்யலாம். He start teaching, so I said today you please teach. I need a substitute, no? So it's a technical இல்ல இன்னைக்கு கொஞ்சம் பிரிண்ட் அவுட் எடுத்து வச்சுருந்தாங்க. அது போய் பிரிண்ட் அவுட் எடுத்து வச்சுருந்தாங்க. அது பார்க்குறேன். பேப்பர் எடுத்து வச்சிடும், வேற ஒரு பிரிண்ட் எடுத்து கொடுத்து பிரிண்ட் பண்ணுவாங்க. எங்கிட்ட பிரிண்ட்டும் குழப்பம். அவர்கிட்ட கேளுங்க. சார் இன்டர்நெட் தம்பி பண்றேன். நம்பர் அர்த்தம் நான் உங்களுக்கு 10 தந்தேன். அதை காப்பி பண்ணி அதை எடுத்துட்டு போயிட்டு உங்களோட ஃபோனில் பேசுவோம்னு சொல்லிட்டு 3057. சரி ரைட், அது கனெக்ட் ஆகிட்டு CIMA also, CIMA, CPA, everything we are doing. Hotel එකක් කරද්දී මේ තියෙන ඔක්කොම කරනවා ඉතින් අපි. ප්‍රශ්න තියෙන්නේ කණ්ඩ කවුරුත් එන්නේ නැහැ. ඒකයි ප්‍රශ්නේ. நீ ஃபைனல் நீங்கள் சொல்லுங்களா
16 தொடங்குது.
நானும் கட்டுறேன் இன்ஷால்லா.
டைம் டேபிள் அனுப்பி சொல்லுங்க.
ம் அது டிஸ்கவுண்ட் தர மாட்டாரா சொல்லுங்க ஒரு 50% டிஸ்கவுண்ட் நீங்கள் ஃபுல் பேமெண்ட் பண்ணா இல்லாட்டி இன்ஸ்டால்மெண்ட்டா எவ்வளோ பே பண்ணீங்க அதான் எவ்வளோ பே பண்ணா ஐ கேன் பே
வந்து 6 மாசத்துக்கு 5 மாசத்துக்கு பே பண்ணுங்க.
தட்ஸ் குட்
6 months அதே முடிஞ்சிடாது.
இந்த எனக்கெல்லாம் செஞ்சு தருவீங்க தானே இந்த சிசி அது இதெல்லாம்
I will charge you. ஈஸியாக செய்யல ஆரோக்கிய செய்தி யோசிக்கணும். ChatGPT தான்.
ChatGPT Hajiar. Okay. Right.
One of my friends, he can't pass exams. He can't study and write an exam. So it's working, but experience, not exam. Now all the most of the exams, MSc and all BSc, they are all assignment based. So last time we put this thing, his result. He did 12 subjects. His results he put. It's fantastic results. A1, A plus, that is more than 90. There's MSc in finance, and all the subjects here, B plus, B plus, B, B plus, B, B plus, B plus, B plus, A minus. Then I asked my friend, very good, but I know how he got it. Then I asked him, did you study? He said, no, all shake ChatGPT. This is assignment based. Nobody is looking, you prepare the assignment and you set. So ChatGPT all the assignments.
வீடியோ போஸ்ட் பண்ணி தான் வச்சுக்கிறீங்க பிள்ளை ஆகுதா ரைட் Right. Okay, let's continue. See, please, what I want to talk about, you see, in a normal situation, practically or for exam purpose, you have to have one financial statement of financial position or a balance sheet for the parent and one statement of financial position for the subsidiary. And in sometime you will have 2, 3, 4 also, you will have 60, 50, 70, 100 also there. I know one situation, bank, when you talk about banks, the banks have subsidiaries. Leasing companies, undertaking companies, guarantee companies, like that, 70, 80, 90 subsidiaries. Manai Group. Think about Taisir, think about Almanar, think about Al-Fardan. So someone sitting there and then need to consolidate all. So that's the exercise we are doing. We are just now learning the basics of this. Last class I told you, simple, what you do is, some more. What we do is, we take the totals on a line by line basis. Fine? So now can you please we'll work this together. Now let's read this. Here they say, 31st December 2014, P company purchased 100% holding on S company for 13.8 million. Now please see the date. Now what is the balance sheet date here? 31st December 2014. And what is the acquisition date? Also 31st December 2014. This is what I'm talking about. The date of acquisition and the date of incorporation. Actually, incorporation date may not be same. Here the incorporation date probably before. Then if you see here, how I find out whether this company's incorporation date and the acquisition date is same. If that is the situation, I can't have any reserves. I can't have any reserves. If I have reserves, that means the subsidiary is, she is late. No, today you are sponsoring the breakfast. So some Filipino breakfast. Anyhow restaurant?
Too much responsibility. No problem.
Yes. He will be sponsor or?
Okay, this one. You
So,
are
yes. Okay. So, then the reserves here, I have 10,600, and that 10,600 meaning, and on this date, the subsidiary is in existence before. So, if you see, first step what we do is that we need to sketch the group structure. We need to sketch the group structure. So what is the group structure now? The statements of financial position of P company and S company at 31 December 2014 are as follows. And at the bottom they say, on 31 December 2014, P company purchased 100% holding in S company for 13.8 million. So, P invested in S. P invested in S and they invested 100%. They invested 100% and the investment amount is 13,800,000. Investment amount is 13,800,000. And the share capital of the subsidiary, how much? 2,400, and you need to find out. And also, here one more thing. This is the date of acquisition. This is the balance sheet date. Okay? And in this situation, actually in this example, this is also the date of acquisition. You see that? 31st December 2014. So, this entire period is pre-acquisition.
not by. Not eating by pre.
Pre. Sorry. Apa பேசுவாங்க?
Wow.
Oh. Right. So, hi brother, good morning. Yeah, how are you?
I'm fine, sir. How are you?
I'm good. But could you allow me some time? I'll call you back. I'm in middle of a lecture.
Sure. Please call me whenever you
Thank you. Right. So, now on this date, if you see the question there, I have the share capital 2,400 and the reserves 10,600. And also, if you remember the marriage arrangement, this 10,600 is the bank balance of the husband. So he hardly earned money sitting in the bank account, safely waiting for the wife to come and manage that. So this is what we call it pre-acquisition reserve. And whatever the dowry that the wife is paying to take this. What is the dowry now? Dowry is, in this example, is 13.8 million, which the parent company is investing on the subsidiary. So that is how much here? 13.8 million. So first step in any group accounting for the practical sake or even for exam sake, you need to have your good understanding on the group structure. Second step is calculation of goodwill. You got to calculate the goodwill, whether this acquisition has resulted any goodwill. And I believe everyone by now know what is goodwill all about. Goodwill is a value that is due to the reputational advantage the subsidiary has over its net assets at any given date. That's the goodwill, correct? So I have the fair value of purchase consideration. How much is that? Fair value of purchase consideration is, in this example, 13.8 million. And then I also need to take fair value of NCI. How do I know whether do I have NCI or not? Depending on the percentage of acquisition. Now you acquire 100%, meaning there is no other shareholders have any stake in the subsidiary. So that means NCI value is how much? 0. So I take the total 13 point minus fair value of identifiable net assets of subsidiary at the date of acquisition. Here, the net asset comprises of these two. Now, how I find it out? From the equity part of the balance sheet of the subsidiary. Equity part of the balance sheet, how much? I have share capital 2,400 and reserves or equity, reserves or retained earnings 10,600. So I have share capital 2,400 and reserves 10,600. Yeah, 10,600. So that is my equity. So if you take the total of these two, actually have a small dot. Yeah, correct. So that is 13,000. So then you find out the difference. Again, a big calculation. Only the genius can get me the answer. That is, Chitti, how much? Chitti, sleeping or awake? Cold? Goodwill. So goodwill is 800. How to say goodwill in Arabic? Shukra. Shukrat al-Maha. Okay. So number 3. So these are the steps please follow in any of your group accounting procedures. So first we calculate the goodwill. Here see, calculating goodwill is a many complicated scenarios are there. As we go on, you will understand. Number 3.
نية حسنة غير الخير. نية حسنة.
نية حسنة.
No, this is
translation.
That's a Google. That's a Sheikh Google. Sheikh Google, we don't know.
This is not نية حسنة. This is
Niya means intention.
Yes. نية.
Yes.
Yeah, goodwill is that's what they talk. But it's different.
Yeah, that's why we need some, real.
How we can get into نية حسنة for the company? Smart.
Yes. Mr. Mansoor. Fannan. Fannan wala Fannana. No, Mannan is different. Okay, now we need to work out the consolidated reserves. So what do you mean by consolidated reserves? You see here, please look here. Now, parent company have a reserve of 54,100. Subsidiary company have a reserve of 10,600. How? When I produce my balance sheet after the consolidation, what are the number that I should show it in my financial statement? Now, also please note that this 10,600 I have taken fully in calculating goodwill. Correct? Will there be any balance for me to take up for the financial statement? I have fully taken against calculating the goodwill. So, Kalas, that's gone. So, that's the same thing that the old reserves has gone for your marriage. Now, then you need to start taking loan in managing the post-marriage activities. So, here the no reserves are there left. So, how we do that? We have the parent company and we have the subsidiary company as per question. 54,000, how much? 54,100 and 10,000 is the information given. Now what we need to do? We need to subtract any pre-acquisition reserves. Before marriage, whatever the money there, bring it to me. So how much is the pre-acquisition reserves we have? All these 10,600 are pre-acquisition reserves, correct? So this answer, we name this post-acquisition reserves. Now what we need to do, from this, whatever the number you have here, you transfer whatever the percentage of ownership that the parent has on subsidiary. But in this situation, it's very simple. We don't have anything. So transfer to group. That also 0. So this is the consolidated reserves. Total is 54,100. Is that clear? So this is the second step, or actually third. First step is the drawing the group structure. Second step is to calculate the goodwill. Third step is to complete the consolidated reserve. Also, please remember, in a real-time situation or in exam, it will not be as simple as this. So, in a more complicated situation, before we complete the consolidated reserves, there may be other adjustments that we may need to think about. There are situations related to inventory. There are situations related to unrealized profits. There are situations related to intercompany adjustments. We will talk about it, but please remember that. So number 4, NCI, meaning non-controlling interest, but in this example, it's nothing. Now we can prepare the consolidated statement of financial position at 31st December 2014. Now, we just simply follow the format given in the question. So, non-current assets. Under non-current asset, they have given you property, plant and equipment. What you do is that you take the parent company property, plant and equipment, how much? 56,600, and the subsidiary company? So we take the total and we assume this total 16,200 now belongs to the group. So can you please take the total? How much is the total? 56,600 plus 16,200. 800, 72,800. So 56,600 plus 16,000, that is 72,800. Then what about that investment? We have an investment of how much? 13,800. Should I take this or no need? For the consolidated financial statement, this 13,800 should appear as part of line item or not required. What do you think? Forget the accounting, from a mathematical thinking, now what we do actually, we take the total of these two lines, right? And you see this 13,800 and we compare this with this. 13,800 I am matching with this, correct? This is what I did. And because of I did this too, goodwill has come. So this is a result of the marriage. So I have something called investment nothing but goodwill. The children that from the marriage is the goodwill. There's a reputation for the parents. So how much is that? 800. So investment totally gone. Next. So we have done with that. Now current assets. There is no any adjustments in this question. So inventory 2,900 plus 1,200. Can someone please help me doing the calculation? 2,912. 4,000. 4,100. Next item, trade receivables. How much is that? 3,300 plus 1,100, that is 4,400. Then cash, 1,700 plus 100, 1,800. We take the total of these three. 4, 8, 9, 10,300. And this is 73,600, correct? Is that right? Okay. And we name this total assets. So what's the total asset now? 900, 83,900. Then we have equity and liability. Under that we have equity. First item is share capital. I told you in the last class, share capital, we only take the share capital of the parent. Only take the share capital of the parent. Parent share capital how much? 8,000. Reserves, what you need to do is, you need to go to this working and find out what is the answer. And you need to take that. 54,000. So 62,100, right? So that is the equity. Then we have liability. Under that, non-current liability, long-term borrowings. Long-term borrowings. What is long-term borrowings now? Long-term borrowings 13,200 plus 4,800. So what is the total? 18,000? Correct? So I take the subtotal. And then current liability. What the current liability I have? Trade and other payables. That is how much? 3,000? This total of these three should be equal to 83,900. Can you please check? $62 plus 18 is 80, 83. How much? 83. Done. So this is a basic way of producing a consolidated financial statement. Let me move on. Yes. Good morning.
Good morning, sir.
Yeah, good morning.
Just a clarification. What time was that we fixed? 10 or 10:30?
10:30. Actually, I'm still in the lecture. Let me finish and then we will meet there. No problem.
All right, sir.
Thank you.
Thank you.
So, what about this question? Let me check. Yeah, what is the difference? Okay. I think same. So this question no need to discuss. What about this? Now here the story is slightly different. So they gave you two financials at 31st December 2014, and what they're saying is, see the notes now. See the notes here. 1 April 2014. When is the financial date? Okay, let me cut this. I'm very sad, but still have no choice. I need to help Siraj.
We told you put all of this.
No need to cut.
We won't break it. And we will choose accept.
Okay. Colors. And I will share this also. Brother.
ഓഫീസിലെത്തിയോ?
Okay. അത് മൊത്തമില്ല. ഓഫീസിൽ ആളുണ്ടാ?
അല്ല, ഞാനിവിടെ ഓഫീസിലുണ്ട്.
അല്ല, no one called you? No one called you now?
No.
Please wait for 1 or 2 minutes. Someone will call you. Right. Okay, let's go to the question now. Now, here, some differences you will see in the question. One of the difference, the first point is the balance sheet date is when? 31st December 2014. The balance sheet date is 31st December 2014. That's clear. And they don't talk about the information for acquisition. at this point of time. And as you go to the next page, then under the notes, 1 April 2014, P company purchased 80% holding in S company. What do you mean by that now? Then they are not acquiring 100%. First difference is it's not a fully owned subsidiary, number one. Number two, acquisition date is when? Acquisition date is 1 April, whereas the balance sheet date is when? 31st December. So we need to address that. And then let's continue this. S company's total comprehensive income for the year ended 31st December 2014 was 2 million. And then what they say? Accruing evenly over the year, meaning every month equals comprehensive income. S company did not pay any dividends at this moment. Don't worry about the dividends. Second point also they talk about the non-controlling interest in S company is to be valued at its fair value of 3.2 million at the date of acquisition. Now let's work out this. So example 2. We need to first see if you draw the group structure correct. Sinna, group structure correct, then the rest of the answer is very easy. Now we have a parent company who is acquiring the subsidiary and they are investing 80%. And the investment amount, how much? 13.8 million. Share capital of the subsidiary, share capital 2,400. And then reserves. Now you see the reserves 10,600 on which date? Be careful with this. This is a confusion that you might end up. This is on 31st December 2014. Now this date diagram is important now. My balance sheet date is 31st December 2014. This is my balance sheet date. My acquisition date is 1st April 2014. Acquisition date. And this date is not really important, but let me assume 1 January 2014. Here they gave you reserves 10,600. Now in calculating goodwill, what reserves we need? We need reserves on which date, in other words? I need reserves on this date. How I figure it out, or how I find out now? They are telling you, if you read the second half of the first paragraph, income for the year ended 31st December 2014 was 2 million, accruing evenly over the year. So meaning, so you know that, how many months here? 12 months here. And how many months here? 6. Are you sure? Habib, you are interfering. November la suwe. No, April. Malana swal mal April. Mapi June.
12 minus 4 how much?
No, 12 minus 4 is 8.
So April 1st.
See, 8 plus 1. 8 plus 1.
3. So 9.
It's a 9 months.
12 minus 3.
Yes, 12 minus 3. He is a good mathematician. He's from doctor from Egypt. Yeah, doctor. This is 3 months. Now, what is the comprehensive income? Now, you see, this is, what is this actually? This is the reserves on 31st December 2014. Meaning, this is the pot. That pot carries the reserves of the company. And that pot keeps all the profits over the complete year. What is the profit for the complete year? These 12 months, what is the profit? 2 million. So, can we work out what would be the profit for this period? What is the, yes, Mahabibi, mathematician, Dia. Okay, how to calculate? Tell me that.
1 million, 1 million.
2 million divided by 12? 9. 1.8? Wallahi, I will kill you.
How?
No, it's not 1.8.
Sure, no.
No, it can't be 1.8. Yeah, he in the pen I have chicken. You know chicken, right? Not chicken. Chicken, Arabic. Knife.
1499.
Wallahi, yeah, he in the, okay, that's correct. But you don't, you should come exact number.
2
Bibi.
million
Okay.
divided by 12
Okay.
times 9.
Okay. I understand. Agree, but no, should be, see, what is the answer for this? 9 over 12. If I want the answer in decimals, this is fraction. 3 over 4, yes. If you convert to decimal, how much? 0.75. 0.75 into 2000 is 1,500. So the company generated 1,500 during these 9 months. Correct? So during these 3 months, how much they would have generated? 500. See? Dr. Mal Sudan. Okay. So now we analyzed
Who's the doctor of Sri Lanka?
Sri Lanka, I think, Dr. Kabir. Yeah, he's only sent message, know about the treatment and all. Dr. Siraj. Okay, anyway. So we will have a separate discussion about that, inshallah. Now, we analyzed that now how much, see, now 10,600 was my closing balance. So can you please tell me how much will be the balance here? Now 10,600 is including this 2,000, yes or no? And this, on this day 10,600, during this period we generated 1,500. So on this date should be how much? I'll try to drink coffee and control myself. This will break. I can throw.
How come I don't want to do that?
Well, this is 10,600.
Hello, Aja. No, there 10,600 in there. In the date, hello.
First of April, how much is the reserve?
9,000? How you got 9,100? Please tell me that. 10,600 minus
Minus 1,500.
1,500. This should be the answer. And if that is 9,100, that's correct.
Tell the way you got the answer.
Answer ke would in the diameter. Fine. Now we have done this analysis. Now what we do? We calculate the second step. Calculation of goodwill. So, fair value of purchase consideration. How much? 13,800,000. The second interesting scenario in this question is about point number 2. The non-controlling interest in S company is to be valued at its fair value 3.2 million. The non-controlling interest in the S company is to be valued at 3.2 million. Now, one of the key changes of IFRS 3 is to deal with how you measure the non-controlling interest. Therefore, I will discuss some matters relating to that before I do this question. See, valuation of NCI. How I arrived the value of NCI. There are two methods, old method and new method. Old method, what we do? Proportionate share of investment. Percent share of investment percentage. Meaning, if you go to this question, they say that they acquire how much? 80%. So when they acquire 80%, meaning remaining 20% is with somebody. Now, how I work out the non-controlling interest in that situation? You see, you go to your equity and then you go to your share capital. How much is your share capital? 2,400. And you also have, when I go to that other sheet, I will explain you more. So this is old method. We do how? Proportionate share of the percentage of investment. New method, we have two. One is a lump sum based on fair value. What you do is, okay, you touch this 3.2 million. Like that, they come up with a value. Or share price at the date of acquisition based on what is the fair market value of the shares of the subsidiary on the date of acquisition. Now, in this example, how many number of shares we have? You see, $1 shares. 2,400 is the subsidiary's number of 2.4 million is the total capital. 80% owned by parent. So 20% is how much? How many shares? 2,400 into 0.2, 240, 480,000 shares. Now what you do is, you go to the market and find out what is the fair market value of each share. And then multiply that by 480,000. The nominal value is how much? $1. We don't worry about the nominal value. We look into the fair market value. So, these are the two ways in which you value the value of NCI. But issue is that after the IFRS 3 came in, this has been removed. No more proportionate share calculation exists. So you can either do lump sum or you can use the share price at the date of acquisition of the subsidiary. So going back to this slide. So now I have the fair value of purchase consideration. Then I need what? Then I need the fair value of NCI. If you look into the question, the non-controlling interest in S company to be valued at its fair value of 3.2 million. Now, okay, we take the total of these two. Can you please take the total? 17,000 is my total of this minus fair value of. Always remember to include fair value. Fair value of identifiable net assets of the subsidiary at the date of acquisition. In this, you have share capital. We know that share capital is 2,400 and reserves. You got to be clever now. The reserves here, on which date? Acquisition date. So accordingly, I need to have the reserves, not this 9,100. So I'll take that here. Now I told you that old method of calculating NCI, I told you proportionate share. What you do is, for the sake of your understanding, you take the total of this. What's the total? 24 plus 91 will be 10,000? 12,500. So you get 12,500 and NCI 20%. What you do is 11,000. So Dr. Sri Lanka Mushkila. Oh dear.
It will become like 3.
Then I know. Okay. Now it's clear, brother. You happy? Good. So 11,500. So what is the percentage of this ownership? 80%. So NCI owned by how much? Parent is owning 80%. So NCI will be 20%. So what you do is you multiply 20 and you get an answer. This is the first method I told you. But this method is not accepted now. So you should not be doing this. So that is old method. So now we take the total of these two. Can we take the total of these two now? As Mr. Siraj said, 11,500. So this is 17 minus 11,500. What is your answer? 11, 17, 5,500? And that's my goodwill. Also, sometimes we call it. Why full goodwill? Because a portion of this we also recognize to the non-controlling interest shareholders. They also get the benefit of this. That the parents, the poor parents have sacrificed their son to this girl. So they need to look after them. So you give a percentage of that. So that goes to the non-controlling interest shareholders. Clear? Fine. So, yes, madam. 3 centimeter down. Okay, so we have done the goodwill. Next is consolidate, working 2 or 3. Consolidated reserves. So we have parent and we have subsidiary as per question. What are the answers? 54, 100 and 10,600. 54, 100, 10,600 minus pre-acquisition. Do I have pre-acquisition? What is my pre-acquisition? This one. Or you can get it from here. That's my pre-acquisition reserves. Clear? So that then what's my final answer? It should be 1,500. This is known as post acquisition. Then we need to do a transfer to group. What is the percentage the parent holds? So 1,500, 80% I should transfer to group. So 80% of 1,500, how much? No, 1,000? 1,200. So then transfer to NCI. We need to give something to this poor NCI people. How much? And see, after that, the husband's pot is kalas. Nothing in his bank. All given to whoever it is. Then the parent company will be 54,100 plus 1,200. Yeah, Habibi Dia. How much? Sorry?
55.
Into November la suno. 55? See, Mansoor is back now. 55,300. So this is the group. Next is NCI. At acquisition date, how much is NCI? How to find out? You go here, you know this number. How much is that? 3,200. Then post acquisition, that is no, this number. This is balance sheet date. Now let's see any other adjustments. I don't think. That's all. So we can now prepare the consolidated statement of financial position. So shall we follow the format? We have property, plant and equipment, assets, under that non-current assets, under that PPE. How much? 56,600 plus 16,200, which is how much? 800, 72,800, correct? Yes. So that is 72,800, and we understood investment will not come, but goodwill will come. Goodwill how much? Goodwill is 5,500. So we can take the total of these two. So 300, 8, 78, 300. Then current assets, that is inventory. Inventory how much? 29 and 12. 3,000, 4,100. Correct? Then receivables. Uh, 4,000. Cash 1,000. Then can we take the total? 5 mettum 13, 5, 9, 10, 10,300. So we take the total of these two. So 600, 8, 88,600. This is known as total assets. Now, equity and liability. Equity. Under that, share capital. Share capital, but we need to take only the parent company share capital, which is 8,000. Reserves. Reserves, I should take it from where? From this number. 55,300, right? So, can you take the total of these two, please? 300, 363, 300. See, I have deliberately put a line here. Okay? Now what I'm going to do, NCI. How much is NCI? 3,500. So, how much? 66,800. See, but the purpose of this above line, you please remember NCI also part of equity, but it's not the group of parent company's equity. It's a separate line item. You need to show it separately. That's why I'm separately classifying. Now I have equity. Then can we go to liabilities? There I have non-current liability. But I have there non-current liability, long-term borrowings, long-term borrowings 13,200 plus 4,800. How much? 18,000? 18,800. Is that right? No, it can't be. So 18,000, right? Current liability, trade and other payable, but you have there 3,800. 3,800. Now we take the total of these three. So please take the total. 66, 76, 82, 80, 88,600. This is total equity and liability. That's how you do a question. Again, please remember, this is the basic question. For practice purpose, this is a good one. But in examination purpose, you need to go on to the more deep into the sea. So, inshallah, I will continue this in my next session. What I will do, there are so much of questions, no point of doing the questions in the class. I just wanted to cover up the theories only. There are some additional matters we need to discuss, like intercompany transactions, unrealized profits, dividends, fair valuations. So this I will discuss in the next class. By then the consolidation theory will be over. But for the purpose of doing questions, this is not the right forum. Am I right? So we will continue accordingly. Thank you so much.